We are looking at the morning of Thursday, April the 27th. So before the open, what do we know about Thursdays? Well, Thursdays have an 83% chance of hitting the standard deviation off of the IB. All right, so it's pretty good chance. Now, what happened yesterday? We wound up in a yellow day pattern ultimately. We finished a red day pattern from Friday. Friday failed to meet that red day high in the last half hour, and that very, very frequently results in the completion of the pattern in the overnight market. That failed, and so we found it taking place in the morning of the following day. But then the yellow day pattern with a fairly early high generated the low in the last half hour. That's the typical yellow day pattern. Now, we're not going to try to predict what kind of a pattern the following day will have, although some believe they can do that. I personally do not. But let's take a look at what we do know. From the overnight market, the bulk of the time, this market spent above the close. The close was right here. So that tends to give us a bit of a bias as far as how the morning will perform. The morning looks like it will be up on the basis of this. The highs of the overnight market did not even make it to the low value area, at least not yet. And the point of control from the previous day is up here at 89. The TPOC is almost at 89. So that's where the bulk of trading activity took place yesterday. It would stand to reason with this bias that we should be heading up in that direction. There is no low volume node in here that we can see. It's fairly evenly distributed, other than the fact that there's really a poor low over here. It didn't really drop off as much as we would expect it to. So that's a bit of a concern. So here's what we think will happen. It would look like we will go up and test these highs, but then it will also look like we will come back down because we've got unfinished business down here as well as below this line. This is an area needing repair. We didn't get very far in the overnight market. There's a lot of repair that needs to be done. So it would seem that after the market moves into the high, we will have pretty much of a green day type pattern where lows are in the last hour of trading, and we should begin to repair down here. We've got an area of repair here. That's the overnight market. Not too concerned about that, but we, of course, all know we had a big gap up. So it's kind of hard to say whether we would have that big of a drop, 20-point drop. Really not too likely. It certainly can happen, but so our expectation is that we will move back into that area around 80, probably 90. The target would be somewhere in here. So a little move up off of the low. The current profile overnight profile shows a little bit of a low node right at 83. 82.75 is the TPOC. It's not showing up as a line just yet, but that's where it is. And 82.75 82.75 is the TPOC, the volume-based POC is right there at 83.75 at present. And that'll show up here in a minute. So we'll go ahead and return back right before the open, and we'll get some trading going on. Oh, and we should make a few other statements here. This is the INX from yesterday. The profile from yesterday leaves a low volume node right up here at around 89.5, with the upper value area being there at about 90.5. Okay, and this is where the bulk of our trading took place. Now we do have the upper value area way up here, and the TPOC at about 93.5. So we'll keep that in mind. But we also want to look at the volume profile. Let's do that. We should not ignore that. All right, so there's that low volume right in here. And lots of areas of potential repair below the POC, which is right there at 93.62 precisely. So yeah, it sort of does look like a move up. That area of repair, I think, is pretty likely, and then of course a move up even higher. This also was a fairly strong area of volume, just a little bit above the low value area here. So that looks like a good target. So that initial move up, going long, maybe a little bit of a bounce into these areas, looks like it's a reasonable approach as far as I can tell right now. So yeah, I will likely look at it going long to begin with, and then short. But you know, anything can happen, so we'll have to be on our toes. All right, so we'll come back. So we're just a few minutes from the open, and we are continuing to move higher. Just get a quick read. We're just beginning to move into a long on the 3.2 momentum bar. That's a good sign. So you can see a little bit of retracement in here, hopefully, and then try to take a long trade. That is what we would hope for. All right, here we are at the open, taking an initial move down. We have low volume at 85, and that's our target. So we're already up in this neighborhood. And it looks like we're probably going to move down a little further. I went to 84.50, 84.25 is low volume. So you can kind of make some sense out of that. But the INX, and we keep a stochastic on the INX just because it's harder to read the INX as to when it's overbought and oversold, especially in the morning. Especially in the morning. And normally it's not a good idea to just pull a trade randomly. Wait for there to be some additional confirmation. You can see all of the low volume areas shown here based upon the stochastic. Now we're finally getting low. We hit 0 on the stochastic, so, and we mentioned that 84.25 was a low volume node, but it can go, to 83 for that matter. Now we've got a little further to go, it looks like. Now beginning to take off. Saw a little bit of divergence there on the premium. Didn't quite make it to 83, so we may it may yet get there. But this is the bounce that we were hoping for, initial bounce off of a low. 83.25 was the low that's respectable. No, premium says we're still coming down. And you can clearly see the low of the previous day. That would serve as a perhaps a target for the low of the current day. Try to stay above that. So we're going to go a little lower here. If we just look at the premium here, we're going to go into 83. Or at least it should seem that way. So we're looking to try to get a fill in that area. Now back to 83.5, we see divergence. So gotta take it. No, now. And this is poorly formed. We're still going down. No, I'm going to correct that. I think we're still going down because this is very poorly formed. We need to go lower. There needs to be more of a tail here. There isn't. There we go. So area around 82-ish, 80. Okay, now it's looking a little better. Low of the INX is right there. $86.76. And it looks like we just touched that. And we were divergent and we were slow on the trigger. I think that's a good place to have gone long. And we did, but we're late. All right, we'll come back. Now let's expand this out just a bit. $85.75 is the accurate upper value area. $88.75 here, low volume node there. Bigger low volume node in here. So up is the direction. And according to the profile here, I would really have to say that 85.75 doesn't make a lot of sense. 86 makes sense. But this could easily drop down here to gain some strength, but we're moving right up into this area of repair in here, low volume. There we go, nicely done. Very nice. Okay, now we're rallying as we anticipated. So let's now take a close look at where we really think we're going before we start rethinking that a short is liable to materialize here. 88, it looks like 89 really. Yeah, that's 89. That's the TPOC from yesterday. And we have a low volume node just below that at 88.75. So there's a target there as well. Now, what we did just do is we came up to this area here. I just inadvertently moved that line. Let me adjust that. And we started to retrace, but I think it's likely we will go higher. But we went up precisely to 87. It's right there where that was, and we bounced off of it. Okay, so obviously that was a bit of a target, but I think we've got a little bit more room to go. Premium confirms we're still moving up. That was the high. So no real divergence there at the top. Now, the question, if you were at this point in time looking to get in on a long trade, where would it be good to get in? Okay. Now we've got low volume down there. That's an area of repair. And that's not half a point below where we are now. 85 here, as you can see, is an area of repair. 84.75. That shows up here as the VWAP. I'm not sure about that. Let me look at a different screen. Now this very simple VWAP indicator tells me what? Almost turning off everything else, I can't see it. Okay, we just dropped below the VWAP according to that. Yeah. Okay, it hasn't really come down much further, but we came right into that area of repair that we talked about earlier. But we still have another area of repair now below that, right in here, and then we finally gained some greater volume right down here, about 1/4 of a point lower. But this may be a good place to get in. We've got nice divergence here. Okay, we'll just come back and keeping in mind our target, and we have 1 hour of video instruction here to work with before we will run out of time this morning. Now this is an easy play up to 86. Or should be. We've got a 1/4 of a point move here. Just to get to that area of higher volume on the INX, where again it could kind of rethink going up any further, but just as a target, it seemed to be reasonable to me. That places the ES at 86. We'll come back. Okay, we did move down. Little area of repair below that. Premium is divergent there. Now, unfortunately, our target may change a little bit here, only because we dropped as low as we did under the POC, volume-based POC. And that would become the first target. Okay, it just pushed right through there. We should make it to 86. Okay, there we go. Nicely done. Nicely done. All right, so our target is still, as we spoke of earlier, up here on the INX at 90.8. Let's review again where we are looking for the ES to go. Of course, we've got 87, the high of the morning thus far, as a target right now. And and then if we break above that, which we would anticipate moving up here to that initial target here, or here. But keeping in mind we have that low volume node right below 89, 88, 75, low volume. So we might, we have to watch premium there, but we might want to use that even right below it. the high of the first hour of trading yesterday would also be a very, I would say that's a conservative target. I think there's a pretty good chance that we can make it that high. So we'll come back in a little bit, see how we're doing. Now we moved right back into this area of slightly lower volume, little area of repair in here. Didn't quite make it up to 87 in that last move. And we're back down to 84.75. And 84.25 is the area of low volume. We just hit that. And repaired in this area. Now we say we could be moving all the way down to the low value area. We could, not necessarily we will. Now we came down into the upper value area here. We bounced thus far off of 84.25, which is that area of low volume. Okay. Which area is the equivalent of this? Yeah, you can't barely see it. There's a slight area of low volume right there. Might require us to, there it is. That's the same area of low volume that shows up on the ES. So it's a reasonable target. Reasonable target. That's just where it went. And up we go. Now let's watch this carefully. And we're watching the INX here in case there's any doubt. And you can see the upper value area up here. Little area of repair in here. We can move that. And then another area of repair in here before we come to this area where we have statistically less volume above this area. But all this we'll spend a little time repairing in here. Particularly right there. There we go. And maybe down in here. Maybe. That's about the same. Now we let this recording go, even though we're not calling for any specific trade here, really to show you the market activity in regards to these areas of repair, low volume, and so on. As studying this, I think, becomes a very key factor in being able to anticipate how the market will behave. Okay. Here we go. We should be right about ready to break the high. There, we did it. Now let's go back. That's where we are now. Little lower volume up here. Let's take a look at the classic. We broke the low value area on the way up. We went just above that area here, as you can see how that corresponds. Now the next would be to manage to get above that, if possible. Okay, back to the upper value area. Let's go back to our screens here. Doing a little bit of retracement. Let's go back further. All right, what do we see in here? There's area of repair there. We didn't really spend enough time there to do anything, though. In fact, we gapped up. So I think that's likely going to come back down. There we go. And that looks like a good spot on the INX at least. For a little bit of a rebound, but that doesn't make as much sense on the ES. Look at where the ES is. Right, let's do this. I keep this screen open only to know the correct calculation of the value areas. And that was at 86. Here it shows 86 1/4. That's not correct. this is correct. This is based on tick data. That's more of an estimate. But 85.5 is, well, even that's a little off. 85.25 is the POC. Even this is currently off just by a tick. $85.25. That's off. That's correct. But let's see if we can't see this. There we go. So 85, 85.50, 85.25 in there. A little spread of contracts. If you're looking to go long, that would be an area of repair. Usually we'll drop below that, come back up to give you a little more time. There we go. It's not yet putting us into 80. There we go, 85.50. Oh, drops even lower and continues on down. Looks like it's going for the POC. It did. We've hit the POC here down to the VWAP area here. Again, I'm not real confident about that VWAP, but anyway. Now we look at the premium. We want to keep in mind where that is, and we're divergent at that point, so this looks like a good place to go along in a situation that does appear to be oversold. So let's take a look here. We went down to 84.75 here. We see some divergence right at the pivot. And the area where we picked up some steam off of the INX was right above this line, as you can see. It didn't want to go into this area of low volume. That's still an area of repair, however, and in that we have the low volume area below that. So this, we could be seeing a little bit more activity below. Okay, that picked it up. Yep, there we go. It's heading right down there. Now, that shouldn't scare us. Not really. But it really bounces right off of that. And so it looks like we are now destined for that area of low volume, as you just see it there. So now this becomes more clear. This is a look for the divergence now. Okay, let's get into this. Let's get in. was just about the previous area of higher volume there. A little repair work in there. All right, we'll come back in a minute. Yeah, that's where we drop off in volume, so that seemed to have been a good place for this to bounce. Okay, good area for it to bounce, but now we have a little problem here. Let's look at this. Premium continued to drop. All right, we got another lower area volume in here. Now that's where the ES pivoted. It pivoted right there. The low of the INX at that point was 69. It went lower to 67 on the next bar. Okay, so what do we make of that? I'm not concerned. All right, that, in my estimation, does not constitute a naked bar for the reason that this went lower on the next bar. Okay, that went lower. I'm not concerned about that. That doesn't mean that it's not going to come back. As a matter of fact, I think it will. But let's go back to another screen here for a minute, because we've just about wrapped up our time here. Let's see, where do we want to go? All right, so our low was at 82. We just came back to roughly 83 and a half, I think it was. What is that? Yeah, 83 and a half. Hit it again. So we're very close. And the low value area based on this is actually 83.50. All right, and that's where we bounced off of. So I hate to think that this was the high. I really hate to think that. But now you've got to, especially if we break below this, we've got to we have to be willing to concede that maybe that was the high. Because it sure is behaving as if it wants to go lower. So I'm not terribly confident about this. Now that I re-examine how close we are to the low, below the POC. Now it certainly could rally up. There's no doubting that possibility, but at the same time, it could be high. That's all that we can say. It could be. All right, so we've pretty much run out of time, to take us any further in our discussion this morning. We did well with the rally up, a couple of retracements thereafter, successfully traded those. Now it's a little bit more difficult to call. That low on the premium, I've explained it. It may not be what it looks like, but on second thought, it in fact may be. Now we just went back there, so let's go back. Let's be fair. So, okay, I think that answers my question. You see what happened? All right, there was your low. Now, before we came back to, again, this is 83.50. That's where we have to measure that. But before it got there, big drop on the premium again. Then 83.50 here. Now, we are divergent there. We are divergent here compared to here. That would suggest we're going up. All right. However, and we're not going to play the game any further. We run out of time. But let's just see here. Okay, maybe we've got a different situation going on. Let's take a quick look. Let's refresh this chart. In fact, what I'm going to do, I'm going to get a real good read on the trend. We're using a 10-second chart, so I'm going to go 3 minutes. That's 18 bars both ways. Slight divergence at the top. A move above that here, but now we're below again. Another move above. Now, the premium looks like it's telling us we're moving down. It really does. The move up there was divergent twice. Here's the way we look at that. 1, 2, 3. 3 times you're out. 3 attempts to go higher and lower on the premium. 3rd time. Now lower lows. Not lower lows yet, but wait till this comes down. As I suspect it will. I don't think we're going back up to hit a new high. I don't think that. Now we may, if we don't make it above the upper value area here, well, you really can't even say that. I can't say that it has to go above the, or it can't go above the upper value area, but that would certainly be a place of resistance, as the POC is a point of resistance, and we're divergent there. Okay, but we're not quite there on the INX. So all sorts of little things happening here. Overall, I think the call right now is short. I think we are short. And let's just look at one other thing. $1.25 is short. So at least at the moment, you've got that to work with. INX is trying to go back to the POC, TPOC. Maybe a 1/4 of a point or so above that. Okay, I think we're short. All right, so that completes our 1 hour video of the first hour of trading in the morning. Hopefully this has been instructional. Just to briefly review, pay close attention to the INX. Now that we have that data available, it's really useful. And since the trend at the moment is down, we have an 85% let's go back to this. 83% probability at present for us to come down to this level, right, which is at about 2380.50, 2380.50. See how that looks. 2380.50. No, wait a minute, that's not correct. No, yes it is. 2380.50. Oh, it's already showing up right down here. And that is still clearly in the area of repair that we are anticipating. And takes us almost up to where we were in the overnight market a couple of days ago. Let's go back a little further. And there's nothing there. Okay, so this is just area of repair on the ES. So I think that's a very strong, I'd say right now, very strong probability. Stay short. There's a very strong probability that we will make it there. 83% is statistically the case, and given the area of repair that we have back here, looks very, very good for me. But that's all the time we have. So that concludes this video for April the 27th, Thursday morning. I'm Rod Kusin and Spoon for Risk.